Welcome to today's video, where we dive into the fascinating journey of one of the most influential figures in finance, Jack Bogle. Join us as we uncover the story behind how Jack Bogle made his fortune and revolutionized the investment world. John Bogle was the founder of the Vanguard Group and a major proponent of index investing. Commonly referred to as Jack, Bogle revolutionized the mutual fund world by creating index investing, which allows investors to buy mutual funds that track the broader market. He did this with the overall intent to make investing easier and at a low cost for the average investor. He died on January 16, 2019, at the age of 89. Early life and education. John Bogle was born on May 8, 1929, in Montclair, New Jersey. He attended Blair Academy, which was paid for by his uncle, as his family had lost most of their wealth in the 1929 stock market crash. John Bogle attended Princeton University, where he studied economics. In his early career, he joined Wellington Management in 1951 and attempted to persuade them to change their strategy of focusing on one investment fund to many. He eventually became chairman of Wellington but was fired after a poorly made merger decision. He then founded his own mutual fund company, Vanguard Group, in 1974. Notable accomplishments. Vanguard. With Vanguard, Bogle employed a novel ownership structure in which the shareholders of mutual funds became part owners of the funds in which they invested. The funds themselves own the investment firm, making the fund investors indirect owners of the firm itself. This structure allows the firm to incorporate any profits into its operating structure, reducing investment costs for fund investors. In 1976, Bogle introduced the Vanguard 500 Fund, which tracks the returns of the S&P 500 and marked the first index fund marketed to retail investors. Bogle's unique structure for Vanguard also made it a natural fit for the provision of no-load mutual funds, which do not charge a commission on investment purchases. When the Vanguard 500 Fund was launched in its initial iteration, it raised only $11 million in its first underwriting in 1976. As of July 28, 2022, the fund manages more than $709 billion in assets. Bogle retired as CEO and chair of Vanguard in 1999 and wrote Common Sense on Mutual Funds, New Imperatives for the Intelligent Investor the same year, which has since become a classic for investors worldwide. Legacy. John Bogle contributed significantly to the popularity of index investing, in which a fund maintains a mix of investments that track a major market index. Bogle's philosophy that average investors would find it difficult or impossible to beat the market over time led him to prioritize ways to reduce expenses associated with investing in mutual funds. For example, Bogle focused on no-load funds featuring low turnover and simple investment strategies. The philosophy behind passive investing generally rests upon the idea that the expenses associated with chasing high market returns cancel out most or all of the gains an investor would otherwise achieve with a passive strategy that relies upon funds with lower turnover, management fees, and expense ratios. Passive investing stands in contrast to active investing, which requires managers to take a more hands-on role with the intent of outperforming the market. Index funds fit this model nicely because they base their holdings on the securities listed on any given index. Investors who purchase shares in index funds gain the benefit of the diversity represented by all the securities on an index. This protects against the risk that a given company will lower the performance of the overall fund. Index funds also more or less run themselves, as managers only need to ensure their holdings match those of the index they follow. This keeps fees lower for index funds than for funds with more active trading. Finally, because index funds require fewer trades to maintain their portfolios than funds with more active management schemes, index funds tend to produce more tax-efficient returns than other types of funds. Who invented passive investing? John Bogle, the founder of the investment management firm, Vanguard, invented passive investing. By doing so, he created a new industry focused on this type of investing as opposed to the traditional method of investing, active investing. He is known as the father of passive investing. Why Bogle's investing style is so powerful? What Bogle's approach made perfectly clear to generations of investors is that it's what you keep that determines your ultimate investing results. And Bogle set up his funds so that investors kept all that much more of their returns. By indexing, he took most of the buy and sell decisions out of the hands of professional fund managers. That left the fund's returns up to the market and the fundamental strength of the underlying companies, but it also substantially lowered the costs of running the funds. In addition to lowering the operating costs of the funds, index funds can operate with substantially lower churn costs as well. With fewer buys and sells, the fund itself pays less in commissions and loses less to bid/ask spreads. In addition, with fewer transactions, index fund investors are far less exposed to the risk of facing large surprise capital gains taxes while they remain holders of the funds. Bogle and Vanguard passed on the savings from all of that efficiency to fund holders, leading to fund expense ratios that, in some cases, even dipped below 0.05%. Those low fees meant nearly all the returns went to investors, and the lower churn costs meant investors were better positioned to keep those returns as well. What is the difference between an ETF and an index fund? An ETF can be bought and sold on an exchange like a stock at any point, whereas an index fund can only be traded at the end of the day at the set price point. ETFs provide greater flexibility than index funds. Bogle's revolution, unlocking time and money for investors. When Jack Bogle created index funds and made them available through Vanguard, he launched a revolution in the financial markets. By making low-cost investing readily available to everyday people, he knocked years off the time and substantial dollars off the costs it took to become a millionaire by investing. That made it much more feasible for everyday people to reach that incredible milestone. With Bogle's passing, the world lost an amazing person who enabled a positive financial transformation for millions of people. Fortunately for all of us, the low-cost index revolution he pioneered has spread well beyond Vanguard. As a result, we can be sure his legacy will live on, and future generations will have the opportunity to build their wealth more effectively and efficiently thanks to what he has left behind. John Bogle is a titan in the history of investment management by starting the Vanguard Group, one of the largest investment management firms in the world. Through Vanguard, he popularized passive investing, making it easier for average investors to invest their capital and generate returns with low risks. And there you have it, the incredible story of how Jack Bogle made his fortune. From humble beginnings to founding Vanguard Group and pioneering the index fund, his legacy continues to shape the world of finance today. If you found this video insightful, don't forget to like, share, and subscribe for more content on finance, entrepreneurship, and success stories. Thank you for joining us, and until next time, stay inspired and keep chasing your dreams.